The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials down 16. Got the Nasdaq up 22. S&Ps are up 1.5. Gold contract down at $4, trading at $12.10 an ounce. We have silver at $14.65 an ounce. Light sweet crude up 56 cents, $69.08. We get the API numbers this morning.
EIA right this morning, half hour from right now. Should be interesting.
API last night.
A lot of action in that oil market already.
Yeah, and it's going to be intriguing because there's plenty of oil. I mean, the bottom line is that, between oil, gasoline, distilled, it's all out there. We'll see where, and we're coming right into where the sellers have been in May and July.
$70 oil, right?
Big time. They've slammed it from 70 to 66 two separate times. Big wide price spread. Notes and bonds, folks. Notes and bonds came down hard yesterday. Now they're flat out here this morning. I expect that we're going to see them lower, though, testing out this August 8th time frame. It doesn't look like they want to do it today, but we had big volume and price spread out there yesterday. Get the 10-year at 120, the 30-year at 144.14. And good old King Dollar's up 20 ticks, 94.655. King Dollar didn't hold price again this morning. King Dollar's got an ABC structure on the way down. We get the euro at 116.86. We get the yen at 114.5. And
where's the yen?
111.5. 111.28. Yeah.
48. Yeah. Perfect.
Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim. And don't forget, folks, every trading day right here, you want to understand markets, you want to understand strategies. Tom White, Kevin Hinks, they got a great program, fast market, 11 to 12 Eastern Standard Time. Now, no matter where you listen, if you happen to be in the West Coast right now, Portland, coming down that coast, listen and remember that you can go right to TFNN on your phone, on YouTube. The easiest way to get us, folks, go to YouTube, put TFNN in, bang, you subscribe, it's free. Every program comes up. You can listen to Kevin and the team each and every day to really get to understand how these strategies work in bulls and bear. Like, we don't have a bear
Just
market.
bulls.
Just bulls, no
so
doubt.
far. We'll see after Labor Day.
No doubt. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. How we doing?
Doing great,
Doing
man.
good,
Yourself?
man.
We're good. Just taking in all this economic data today, it's pretty interesting. I thought 4.2 for a second look at GDP was a nice, strong number.
Definitely.
Huge number, man.
Mortgage apps didn't do anything that would surprise. It's a very volatile number. Up big last week, down small this week, so no big change there. So we're trading them.
Yep.
Right, I mean, more earnings. Dick's, I thought was pretty interesting. How about Dick's Sporting Goods? Did you guys see what they did there? They've got a little issue with Under Armour.
Yeah.
They basically said the reason they missed sales was because of Under Armour.
This is. So, Kevin, when that was going on, right? So, picture this, folks. I'm sitting at my kitchen table writing a newsletter, right? And I hear that, I'm on the Bloomberg, and I hear it coming across. I says, oh, my God. Can you imagine? Like, Under Armour sitting there saying, this guy got a freaking nerve. Do you know what I mean?
Sure.
Yeah. And you know why this is, Tom and Tommy? Is because Under Armour's going through Kohl's.
Oh.
And Dick's doesn't like that, and they're saying it hurt our sales because when you go through Kohl's, by definition, that's a little more of a discount retailer than Dick's is a full-price retailer.
Interesting.
So they're complaining about Under Armour in the public, which I've never seen anyone do that, because of that. Right there, that they're putting some of their product through Kohl's and not just Dick's Sporting Goods. Pretty aggressive statement.
We're looking at one of the quotes here, Kevin, from the CEO, and he says, we delivered double-digit growth in e-commerce, private brands, and athletic apparel, excluding Under Armour.
Excluding Under Armour. I mean, can you believe that?
Yeah.
And then Kohl's, on the other hand, is saying, hey, Under Armour's doing great here. So a little war of words going on. Pretty interesting to hear this at the corporate level, but you rarely see that in an earnings announcement.
Yeah, and the thing that's intriguing about the Under Armour deal, and what you're saying with Kohl's, folks, is at all-time highs. You're at $76, and it's a great-looking chart.
Yeah.
The thing that's intriguing is that it seems we all work out, but I go out of my mind about how much, like, some of this, whether it's Under Armour or Nike, actually costs.
Sure.
So,
right.
I don't go to Kohl's, but Marshall seems to have them on sale sometimes. Or TJ Maxx, do you know what I'm saying?
Yeah.
It's hard to pay, what they want for some of those shirts, man.
I agree.
Do you know what I mean?
The workout T-shirts that cost you what, $35, $30, $40.
You walk out of there, you get pants and shirts for $100. It's like, give me a break, man. I'm not going to work. You know what I mean?
What is this? What is this? A tuxedo?
Seriously, man. Seriously.
They got, there's always some new technology for a T-shirt, right? In terms of, wicking away the sweat, the dry release, all, and they put the price tag on it. But yeah, Under Armour, man, they've been in some trouble.
$19.
And today
$19.48. Yeah.
Down big numbers, down $1.50. Yeah.
Wow.
Yeah.
Well.
So yeah, I mean, they're going to fight it out. Well, today on Fast Market, we're going to talk about Dollar Tree.
Okay.
We're going to talk about their earnings, and then Salesforce. We're going to talk about their earnings,
Nice.
and we're going to have a great presentation on Campbell Soup. Ben Watson is going to come on and talk about Campbell Soup.
Nice.
And likefolio.com is going to come on and talk about Dollar Tree versus Dollar General. We're going to compare the two stocks. So a lot to do today.
Interesting.
Really, Dollar Tree versus Dollar General. It's so funny, Kevin, is that in the housing business, right? I'm always at Dollar Trees because what happens is that the balloons are only $1. So if I'm buying balloons for open houses, it's only $10.
Nice.
Hey, I mean, discount retailers, look at what Walmart's doing, Tom. I mean, isn't Dollar Tree, and everyone thinks Dollar Tree, relatively small company, they've got 14,000 plus stores.
Wow.
In 48 states. They're massive.
You know what blows my mind? They're everywhere. Like, what happens, folks, is that, you have them in middle-class communities, too, but in the lower economic class communities, right? They're everywhere. They're just in the middle of, and they're busy.
Yeah.
And they're, and you know what I've noticed? So they get big stores, but they only always have, like, 2 people working. But guess what? That register is just going. And,
Sure. They got somebody to take money. That's what they got, right?
Yeah.
At the top, totally.
Exactly.
Interesting story, though, and they're you're right, Tom. They're placed very strategic in middle class to lower middle class areas, and they do very good job of staying, with their product mix. So but they're massive. It's hard to realize how big these companies are, as you go through them. But
well,
we're going to talk about that today for sure, though.
And what's really cool? What I've noticed, because I'm in there a lot. I'm in there every Sunday.
Yeah.
And what I actually notice, it's very unusual that you're in a large store. All these people know each other. Like, when I'm shopping, it's like being in a little variety store, but you're in this big store.
Totally.
Yeah.
Guys, the little grocery store that I grew up on the south side of Chicago that was mom and pop owned, it's now a Dollar Tree.
There you go.
That is it.
That's it.
Totally.
Folks, right here, 45 minutes from now, great program. You want to understand strategies, options, futures, check it out. Kevin, you have a great one, safe one. We look forward to the show.
Have a great day, guys.
Thanks,
Thank you. Stay right there, folks. Tommy and I come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service, Fibonacci 24/7, is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's down 15, Nasdaq's up 26, S&Ps are up 2.5, and it's Wednesday, so it is EIA 10:30.
You got it. Crude oil every Wednesday, 10:30 a.m. Eastern Time. It's about 10:19, so we got about 11 minutes until that number comes out. Oil, quite a little run to the positive side this morning. We're looking at a 5-minute chart. At about 4 a.m., it takes off from about 68.40 up to 69.20. We're sitting right at 69.
That's quite a move, man.
It is, right?
Yeah.
And backing up the chart a little bit more, we saw some volatility. This is yesterday's action. And then I believe, yeah, so we got the API number at 430. A little bit of volatility in there, but quite an acceleration, man. So I jumped to the crude oil spreads in here. We're in commodity spreads, crude oil. We get the numbers at 10:30, and what we're going to look at setting up here, what we like is a volatility trade with these numbers coming at 10:30, right? So what we want to look for is bullish and bearish positions simultaneously. So we're going to jump to the 11 a.m. expiration spreads first, and what's nice is oil's at 69.01, and we're going to have spreads that begin at $69.
Oh, that's a good one.
Yeah, so we're talking about literally a penny of intrinsic value to the upside. So your bullish spread's costing about $17, which is about 17 pennies. You're buying in at 69.17, 17 pennies above the floor of that spread. You'd have profit potential up to 70.50. And then pretty similarly, on the flip side, here's your bearish spread from 69 down to 67.50. You're selling that spread. And the difference in price here is the difference in the fact that oil's about a couple pennies to the positive side.
Right.
So you got literally about $2 of intrinsic value you're paying.
We like it when it lines up like this.
It is, because you can see that, you know, basically both of these contracts have about 14 cents, $14, you know,
and premium.
Oh, premium, and then you just got the bullish ones and now as we're ticking away, you know, now we're talking about 4 pennies to the bullish side. You can see them shifting a little bit, but you're looking at about $30 for the 11 a.m., which would represent about 30 cents of movement you'd need away from $69 to start to break even, gain some profit.
And we've already moved $1.50 today.
Yeah,
I mean, from last night.
Yes, I mean, from yesterday's action, just big move across the board. So those would be your 11 a.m. expirations, okay? That would give us about a half hour after those numbers.
Yeah.
Jump into the noon expirations real quick. we're going to have a little bit different price point.
Right.
They don't line up exactly perfectly because it changes to 69.25. And this is because as the day is progressing,
Yes.
they're launching these
They get
spreads.
set, yeah.
And as you can see, that of course they might line up differently when you get, a dramatic move of almost $1 in the span of 5 hours.
Right.
So
What
you
about the
could-
230s?
Yeah, so that's not quite, but what is nice, and we jumped through it. So the 8 till 230s line up with $69 perfectly, okay? But the daily ones do as well. Now these change a little bit in that on the 8 a.m.s till 2:30s, you're going to have $3 of profit potential exposure.
Right.
And then on the dailies, you have $5. And what we can go over real quick is that the 8s till 2:30s, so you have $3 from 69 up to 72.
Yeah.
And then you're going to have $3 from 69 down to 66. Now, most of the difference in the price here is going to come from the time that you're paying
Right.
for, right? Because
41. Oh, the other one was $31.
$30 basically. So you're looking at 41. You need 41 cents away from 69. Right?
That's
And if you ever got something really dramatic, as in you have more than $1.50, right? Where you get
Right.
a $2 move by the end of the day, not impossible for sure with the way oil's been moving.
And you know what's so cool right here, folks, is that we're at a spot here at that $70, $69 spot that it hasn't been able to break through, but this would be the time that you could get either, break topside or break downtown, because this is where the bulls and bears are fighting.
Yeah,
You know?
no, I mean, there's been, anytime you just see the type of volatility, man, I almost can't, encapsulate the type of swings that we've had in this market just in the last couple of days, let alone
Right.
last week.
Right.
So one final one, which is great. So here's our 8 till 2:30s, right? What I want to look at
That's
real
a
quick-
$3 spread.
That's a $3, but what normally happens in this is what we're going to bring up, is
Yeah.
that here's your basically daily, which is set kind of
$5
last
spread.
night as the market.
Yeah.
So you have the same price, which is 69. And this is what I wanted to bring up, is that, so look at the bid offers here. In one, you're buying a spread that goes from 69 to 72.
Yep.
And they're giving it to you at 69.20. In the other one, you have the same exact 69.19. You can see them ticking simultaneously. But if you ever got to move above 72, you get that profit potential all the way up. So I would encourage people, if you're making this trade, you're paying nothing for that extra added
$2.
exposure to the upside, right?
Right.
And then it's probably going to be very, very similar on the way down. Here's your bearish one, and you can see the bid offer.
Exact.
So there's your one with $3. There's your one with $5. And again, you'd be selling the bearish spread. You'd be buying the bullish spread. And so there's about your $41. And what's great is, so there's where you get to make the decision, right? Do you want to pay $30, which is basically 30 cents
Yes.
for your 11 a.m. expiration? Are you looking maybe just make a quick trade? You're out in 15 minutes. You don't want any exposure after the numbers.
Okay.
Or do you want exposure till 2:30, in which case you're paying about $41, which is 41 cents for that type of
I
action.
like the 41 cents.
Yeah.
10 cents for 3 hours is not bad.
I would agree, and it's
Well, it's actually three and a half
two and a half.
hours. 2.5.
No, you're right, 3.5. We're looking at the 11 a.m.s.
Yeah, it's a long time.
It is, and if people follow the oil reaction to the EIA number that we get in 6 minutes now, the first move's not always the move that carries, right? As in you get one move off the initial top line number, and then for the next, sometimes it takes off at 12 on one direction, at 12 Eastern time, noon, 1 o'clock. Decent pricing if you feel like the market's
Gonna be
right
volatile.
for a pop.
Yeah, right,
exactly.
right, right.
So,
And-
yeah, good.
And folks, you just come over to our website. If you haven't test driven yet the Nadex platform, you'll see the banner, hit it, bring it up. They'll put paper money into your account so that you can get used to how these defined option contracts trade.
And I said to you, normally we might come into this number and we start talking about it at maybe 23, 24 after, just go over kind of the scenarios, and we come out of that break at about 10:18. I said, we should go over it right now because oil's moving so quickly that it's kind of nice that it's lined up, but it speaks to the fact that, because look at it, I mean, it's not, 9:45, we're up there at 69.20. Not a huge move, but you can see how that would shift this
20
trade.
cents.
And then, if it was up at 69.20, maybe you look for the noon expirations, which had 69.25 as that point.
Right.
So it's nice when it lines up. We're 1 penny away from that price point. Very little intrinsic value you're paying, and we get those numbers in less than 5 minutes. We'll see what happens.
Wild, man.
Totally.
So, folks, some of these, I was going over this last night. So, Telray, this is a cannabis stock, right? Let me see if it's still up here. So, check this out, folks. This is pretty amazing. Now, this thing,
Tilray, maybe? Telray?
this thing just went public in July. So, The low's 20 for the year. The high's 62.
I heard you talking about this.
This
on
is
the show.
about as intense as you get.
I heard you saying, wait, did it go public in July? It did just go public in July. I heard that.
July 18th at $17. Okay.
Yeah, and then you say, oh, maybe it didn't trade there, and then you look, and sure enough, it did.
It did
I
trade
remember
there.
because I was doing the same thing. I said, he's just looking at the IPO price, right? And then you pull up the chart. Nope.
And so when you look at these numbers, it's pretty wild. They made more than analysts were thinking. Not a huge amount, but they made more. But every time when I look at the, here it is right here.
One more up. Go up. I think it's going to be the one right up.
Oops.
Oh, just go into the news or CN, yeah.
Oh.
And down once, I think. Right?
Yeah.
There you go.
So you had the revenue, the estimate had been $9 million, they made 9.7. The loss estimate had been 5.5 million, they lost 4.7. The thing that's amazing is that you have a company, now they took in 10 million in sales and they get a $5.5 billion market cap. So that's the kind of growth that the market is expecting.
They don't care what they're making this quarter. Yeah, it's almost irrelevant to what they're going to be worth.
Intense.
Yeah.
Stay right there, folks. Tommy and I are going to be coming back with those oil numbers.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So crude inventories fell 2.57 million barrels. That's quite a difference in the API. API, gained 37,000.
Okay, and the expectation, which is the big one, was they were looking for a decline of about 1.5 million barrels. So less oil in the market. We're probably going to see higher prices. Let's see what's happening. There we go. Not bad. So we're trading at $69, spiked up to about $69.40. Recapping some of those traded to and over, looking for the 11 a.m.s, you need about 30 cents of movement.
Yep.
You have the 230s, you need about 40 cents of movement. So immediately, you're at least break even to the positive side.
Right.
And again, we go over these scenarios, but here are our 230s. So this would be your bullish trade right now. You want to sell that out, you get 47 bucks, costing about 41. Give it a few seconds, you might get more than that.
And that's the one at 230.
That is the one at 230.
Yeah.
What I was going to even highlight is, so this is where your market bias, what are you looking for, right?
Yeah.
What do you really think has the most exposure as into upside, downside? Do you want to let this...
I'd be, if I had one, I'd be selling that right now.
Okay.
Yeah.
And so with that type of action, you say, okay, maybe we've gotten the exhaustive push on that initial number.
Yeah.
What's cool about doing that is that you could sell this out at $48, $49. You make a small profit on what you have. Percentage-wise,
10
it's not bad.
Yeah, no.
And
33%.
But then what happens is you have exposure until 230
Right.
if you get a reversal. And if you have exposure with equity anywhere below $69, which is
Right.
not outlandish when you talk about, we're talking about now, what, 4 hours? Yeah, 4 hours from right now.
Right.
In this market. So.
And the reason that I'd sell it, folks, let me just bring up the Bloomberg just for a second. Let me show you something. Because this is where it's happened. It doesn't mean it's going to happen now. But what has happened each and every time that climbs up to this level is where you have had some major sellers. Like right here, what is that? That's the 25th of May.
Yes.
It went from 69.72 to 66. That is the
July
11th of July. You went from 70.94 to 66.57. Both of those folks was in one day. So, you're pressing into where the sellers were before.
Yeah.
So, where I'd look at that trade is that, okay, hold it. I made money on that side. Now, let's just see what we can do.
For every trader that thinks that, there's a guy or a woman on the other side that says, you know what, it's going to blow right through that level
Totally.
and go to the other side.
And that's what made this level so good
Right.
for the volatility trade in general, too,
Definitely.
folks. Because the bulls and bears are going to be fighting like crazy over this level. There's no doubt. You know what I mean?
We'll see what happens. I mean,
yeah.
quite a run. You back this up, right? It's just extending. I mean, we're now up a solid $1 from where we were 6.5 hours ago.
Right.
Pretty remarkable.
Right. And the deviant part about it, has to do, we had two different numbers. And there was quite a difference in those numbers between 37,000 billed last night at 4:30 versus a 2.7 million
Yeah, those APIs,
downdraft.
they differ a little bit sometimes. I always like to look at the analyst estimate, the Bloomberg estimate. What's the expectation coming into this morning? And that's where, so the PEG number was a decline of 1.5. You got a decline of 2.5. Less oil, higher prices, man.
877-927-6648. Let's go take a look at some of the higher volume stocks out here. And we were talking with our man, Mr. Kevin Hinks. We were talking about Dick's Sporting Goods, them hammering
Under Armour.
Under Armour. Yeah. So Dick's,
they're right up there, down $3.
Oh yeah, Dick's is down $3. You got let's see, GE. That's flat. Tilray's the big one, right? Look at that
Yeah,
thing.
Tilray, I think. Yeah.
Up $7.90. You get Square is up it's almost up $4. It's up another 5%. What is this stock here? Look at this thing, man. What is this? This is up.
Glaukos, maybe?
Yeah,
Glaukos?
so-
Glaukos?
This is up $17. What does this company operate?
Ophthalmic Medical Technology?
company-
Hopefully, that's a tough
Oh,
one.
look at this. Okay, the company
I'm guessing
develops
that's like an
and markets medical devices for treatment of glaucoma.
I was going to say opposite is some medical, yeah.
Range of glaucoma diseases, state and progression. Now, this is, so I wonder if they just come up with numbers.
$2.2 billion company as of this price tag.
So let's
Can you go into the description one more time to see
Yeah.
when their earnings were? 'Cause I'm curious, the same deal.
No,
No.
So they got
have
something else
news.
here.
They got news
They got
coming. There you
news.
go.
Oh,
So they a competitor pulled their product, right?
yeah. So Elcon voluntarily withdrew micro stint from global markets, citing
Okay.
5-year data from a long-term safety study.
And that's Novartis, their company.
Okay.
They're a big player.
Yeah.
And that's yeah. Yeah, so this is a clear positive for near-term numbers for Glaukos. It would make sense, right?
can add as much. So they're saying that this could add as much as $50 million to the 2019 revenues for this company. Yeah. Okay. Pretty wild.
Yep.
That is one number, man.
So when in August 2016 you had this company Glaukos shares falling as that stent gained approval.
Okay.
So you can see our direct competitors, and then in November 2017 its shares fell further when research suggested that same product may gain market share.
No, they're not going to have it at all.
Right. That biotech. And I know this might not be biotech, but
that's
any type of medical.
Yeah.
You're a development company when you're developing drugs, technology to save lives, whatever it is, right? Improve people's lives. It's
big number. Well, you know, when we take a look at that, let's go take a look at that dollar index. So the dollar index out here, intraday, you know, you caught a bid up to 94,860. Then it gave it up pretty good. I mean, it's, you know, the seller is laying there. It's, you know, right from the 94,860 right now we're at 94,570. And the number to keep your eye on is going to be the high of what I think it's going to continue to test, which is the 94,605. That's the high of June 14th. That's its big strength. So what we've done, we've come down to that level, and that it makes sense that level is support, the top of that level, because that was a huge day. The deeper that we get into that number, the more probability is that we can get to the bottom of that number. And, of course, we're kicking into Labor Day.
Yeah, we're right around the corner, man. Thursday's tomorrow. By the end of the day, everybody's going to be away, and who knows who we'll see come Friday because, I'll tell you, the weekend is upon us.
I wonder, is the hot streak still up in Boston?
Today's the day.
Oh, today's
the heat one. Stay cool up there in Boston. It's going to be highs of a literal of 96 degrees, which I think you add like the feels-like type temperature of like 105 type numbers. So.
And when you're up in that cement pile, folks, it's pretty intense, no doubt.
That cement absorbs the heat, and then it radiates it back out. It does.
We got to take a look at Bitcoin. Bitcoin's hanging tough. It's 7,085.
It's interesting. For the first time when I pulled up Bitcoin this morning, I kind of had like the feeling like, oh, I wonder where it's going to be, because we've had a little bit of volatility. You know, I was like, oh, it's right where it was yesterday.
Yeah.
Okay. I haven't felt like that in a while, where it's been inching along 6,500, 6,300, 6,700. I said, I was above 7,000. We still going to be above 7,000 this morning? We are. We'll see, though. Long weekend for Bitcoin?
No, Jason and I were talking about that yesterday. Yeah. You know what I mean? Because it's going to be intriguing, folks, to find out what does happen when everyone has that extra day off. You know, because there's a lot of Bitcoin traders. It seems, you know, that over the weekend it has some good movement.
Definitely.
You know.
I mean, you always see Jason's talking about, you know, wallet creation, right?
Yeah.
Those types of things. It's a very retail aspect of things, and that is something that takes place more outside of normal business hours.
Sure. Yeah. Stay right there, folks. Tommy and I are coming right back. What time is it? Oh, good. We got Teddy K.
I believe so. Coming up. Talking some Forex right after this.
Dow right now up 6, Nasdaq up 41, S&P's up 6.5. Coming right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow Industrials up 14, Nasdaq up 46, S&P's up 8. Let's go over to our man, Mr. Teddy Kegstad at Forex Trading Unlocked, as we do each and every Wednesday at 40 past the hour. You can check Teddy out by coming over to our website at TFNN, folks, and you can go right under Nadex News. You're going to see he's out there writing for Nadex quite a bit. What's going on, brother?
Hey, it's a busy Wednesday morning in the trading world, huh? We got the British pound exploding higher, and you got the yen that looks like it wants to do the same.
Yeah, it's intriguing. Overnight, yesterday, Teddy, we were talking about the deadline, and it looks like, well, it doesn't look like, well, they extended the deadline today for the Brexit.
Oh, right.
Yeah, of course
they did.
Exactly,
Surprise.
exactly. Yeah, so you know what's amazing is that, I mean, that British pound, man. We were talking about it yesterday. It's like that little baby. It's been
Since April, right?
well, yeah. I mean, from 145 to this 128 deal. I mean, I think it was getting hammered anyway. So it's going to get intriguing watching this whole thing shake out. So what are you thinking, Teddy?
I think in the short run, to follow the week out, I think you got to be long. I think the bounce is real.
Yeah.
I think it's not just a one-day event or what's going on over the past 2 days, really. I think it's going to follow through into the weekend, especially since we're coming into holiday markets in the U.S.
Yeah, and you know what's so cool, folks, is that when you're trading, like, this is a monster range, and then you have news on top of it. Hey, listen, we're extending it, and we all know well enough. Well, we seem that if they didn't extend it, it would be a horror show, right? I mean, it'd be like, okay, is the pound, going to get destroyed? And it's like, okay. So now they're all going to come to their senses and say, okay, we got to make sure there's some kind of a deal before we all break up, right?
You want to talk about trade worries, right? You leave the whole EU with no trade deals attacked at all, and
right.
you just, I mean, that's a tough one on your currency. I don't envision that might happen, but it's possible, and that's what you're seeing in that market. Definitely.
Yeah, wow.
Right.
So the yen, talk to me about the yen. What are you thinking at the yen?
The yen, I like the strength right now. Short term, I think you got to take the U.S. dollar yen to the upside. So we had that 111 pivot area we talked around for the past month and a half or so.
Yeah.
And now it's holding nicely. I think that going into the closing of the week and into next week, that the yen, this is not a corrective move. I think it's definitely a trend that we'll see that's going to be holding for a little while.
That's going to be wild. So let me just go over. I want to look at the Nikkei just for a second. Yeah, look at the Nikkei's at the highs too. So, yeah, that correlation between that yen and the Nikkei, man. I mean, that's pretty intense. You know, if that in Japan, folks, if that yen gets stronger, Teddy's not thinking that it's going to get weaker. When it gets stronger, man, that Nikkei gets smoked.
And vice versa, right?
Yeah,
When it gets weaker, the Nikkei gets
exactly,
some strength.
exactly.
Right. Reverse correlation.
So, euro, what do you think with the euro out here? It's kind of interesting. The dollar and the euro are kind of fighting it out, huh?
They are, and I think you have to go with the U.S. dollar strength. Like, I think this is a corrective move higher with the euro that's been going on for the past week and a half. And I think today pretty much is the day it runs out of gas. So it's in a toppy little area.
Yeah.
So I think like the 117 even to 117 quarter, that's a really major pivot, which I think it's going to be more resistance than support. So I think by Friday and definitely into next week, you're going to see the euro under pressure and down probably back in the 116 area, lower 116, 115 area.
Right. And as Teddy said, folks, it pressed the 117 this morning. This is where there's a big supply line there. There's no doubt from the last 3 months ago. That supply line is pretty intense.
You can see it right there. Totally.
And of course, when our markets are closed on Monday. Yeah, which is going to make a big difference because it's like, okay, it seems, Teddy, that these currencies have been moving quite a bit. I mean, because the dollar had an extraordinary run, has had an extraordinary run, which killed these emerging market currencies. A real question is going to be when more traders come back on Tuesday, Wednesday of next week. Which way are they going to basically push these currencies around?
Yeah, that'll be an interesting show, especially with the 3-day layoff. Europe won't be on holiday. So, I think that the currency is the way that, we didn't get a sleepy trade summer this year. We had trending markets. They were very active.
Yeah.
And I think going into the end of the third quarter, you're going to see September have a lot more volatility. And I think the dollar move right now is, especially with the way NAFTA is rolling, and Canada is going to be pretty neutral, I think, until this gets hashed out. I think that you got to go with the dollar strength. It's going to continue into the end of the third quarter until at least NAFTA is complete, And then there's the whole Brexit issue. It's a whole nother, who knows how that's going to go.
Yeah, and I guess then looking at that's going to be intriguing watching these commodities then, because the strength in the dollar, no doubt, keeps these commodities in check,
Oh, it's a headwind, right?
Yeah, headwind,
Yeah.
big headwind,
Yeah.
big headwind. And we've certainly got the oil numbers out this morning. We get some nice volatility inside that oil market. First, it popped higher, and then it just basically gave it up in spades.
It did. We'll check back, but it did.
Sure. I think oil is going to be a tough trade for the next month or so. I think it's going to be a little range bound in this $171 to $68 range.
Yeah, it seems, when you take a look at it, whether it was May or July, you got a couple big sellers laying there, man. May and July, that we came down $3 both times in one day. It's like, okay, that's not you and I selling into that market, man. That is either a large producer, saying, hey, I'm happy with $70 oil. Let's sell it forward, right?
The size of the oil market to move at $3 in one session is amazing.
Well, picture if we all had oil in our backyard, man. Like saying, okay, we were at $66, 4 weeks ago. It's like, okay, I'll take 70. Let me sell some oil forward.
70's not a bad price, right? In terms of where we've been in the last couple of years.
Absolutely.
Nice big bathtub of oil.
Bring it on, man. You don't have your bathtub of oil?
Forget it. If we go back to the pound a bit, where do you think the pound can go out of here, Teddy?
I like him going up to 131.20. I think that's probably a good stopping point for this move. I do believe it's going to definitely try and make a run towards that area. I'm pretty bullish on the pound right now for the next week or so. And the pound goes, it goes.
I was just going to say, that's a short-term one, as in not getting too much into the actual separation of the Brexit. Because that's
right.
I'm almost stuttering to say, I can't wait to see how that actually somehow finishes up in terms of those negotiations.
Well, what's so cool about that, and this is, the trade that you're talking about, Teddy, I love that trade, because what happens, folks, is this. It's very unusual to have the pound this low anyway, and when I look back in the course of 30 or 40 years, the pound always seems expensive to me. Do you know what I mean?
Yeah.
And it's like, okay, you're at 129. Really? You know, it's
a
just
brave new world, man. They're not even going to be in the EU. That changes everything dramatically.
I know, but even before the EU got together, I remember I did a lot of business in London, so it was always expensive, man. The pound was always like 148, man. Do you know what I mean? It's like, you know, it drive me crazy going over there that you had to spend so much money. Do you know what I'm saying? It's like, oh my God, you know,
It'll be on sale soon, right now.
Oh, it's on. Listen, folks. Bottom line is that you should be buying some pounds if you're going to go to London.
Oh, that's for sure.
No doubt.
Definitely.
That's a good play, without a doubt.
Isn't it? Teddy, it's always a pleasure, man. We look forward to, first off, have a great weekend. We look forward to speaking to you next Wednesday.
You too. Enjoy the holiday. See you next week.
Thank you.
Thanks, Teddy.
Stay right there, folks. Tommy and I are coming right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Oil. So,
Was oil listening to us in that conversation?
I'm
because
telling you.
where are we? We're back under $69 right now, trading at $68.95. We got that spike up to a high of $69.48. It's kind of convenient. We talked about, what are you looking for? Maybe you'd sell it. You'd have that possibility. If you did sell it, you would always have exposure under $69. There would be your bearish spread that lasts until 2:30. And one of the things we pulled up during the break, I noticed, is just that So your max loss in these trades when you're using $69 would be that 69 price point because you want exposure to the upside and downside. That's actually your max loss at 69. And what's interesting here is that we're only 4 pennies away from that price point right now. But they have so much premium in these instruments still after the number. So you're going to see that premium get sucked out at 10:30, some of it, right? Because some of that premium's waiting for the EIA number. But there's still a relative decent amount of premium in these.
Because it's jumping around.
Yeah, and because you got till 2:30, right? As in, so that's where it's like, it's almost amazing to see how little premium they were charging you for that 10:30 number specifically, because there's still all this premium in there, which is just time premium.
Now, let me see. What would happen if you close the short part of this trade? Because I would say that we already closed the long part.
So this is your bearish spread right here, and you could buy it back at 68.79. So you'd get, there's your $21 you'd be taking in, which is the difference between 69 to the 21 cents underneath it, which is $21, which is huge when you're looking at the whole trade was costing us $41. If you had taken it off after the first spike, you got about $45 to $48, and then you'd have another 20. I mean, what's interesting is if you hadn't even closed it out and you said, you know what, I just don't even like this trade. It didn't do what I want. It kind of had a spike. It's back there.
You get your money back.
You could close out both. You could sell the bullish one, get 13. You could buy the bearish one, get 22. You get $35 back out of the 41. And the market barely moved. I mean, that's a decent risk reward.
And you can wait a little bit longer. You get to 2:30, folks, and oil's going down.
Bearish spread. There you go. We'll see what happens.
Stay right there, folks. Kevin Hinks and his team's coming right up. Thanks, pal.
Thanks, man.
Wow! Go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.